Hello everyone. Here is Slava Klleyman, realtor in province of Ontario. And today my guest is Elena Bogomaz. Elena is a mortgage professional and chartered professional accountant in province of Ontario. Hello Elena, how are you doing?
Hi, Slava. It's very nice to see you. Yes, I'm very happy. I'm very excited. Thank you very much for inviting me.
Thank you, Elena. Today, guys, we're going to talk and discuss with Elena important topic that related to real estate and mortgage. This is all about credit report essentials. We're going to talk about what is the credit report and why we actually need it. And more, of course, more information about that. Okay, Elena, tell us about the credit report, why we actually need the credit report and what is it?
Perfect. It's actually a very important topic you're touching on today, Slava. A lot of borrowers consider the mortgage process as very confusing, and we understand why. I want to break this process down to the three major components which will simplify the process. First and foremost, lender will be looking at your credit report, which will show the credit score as well. Number two, the lender will be looking at your employment history and employment status. And number three is a source of your down payment. Those three components will determine the risk for the lenders in order for you to borrow money from them. That's why the credit report is component number one, and it's the most important part of your mortgage application. So what a credit report includes, it's actually showing your credit history, number one. It will show when accounts were opened and when it was closed, if it was closed. Then it will tell them how often you pay your monthly payments, and if it was any delays or your payment was not paid on time, it will be shown in your credit report. It also will include the information on your credit balance, monthly payment. Employment history actually will be in your credit report as well, believe it or not. And the entire history of your car loan or line of credit or anything like that. It's very comprehensive, and that's why it's so important to lender to know your consumer behavior, how you can manage money.
Thank you, Elena. How is the credit score determined?
Actually, a very, very complicated algorithm who will look at the different components of your overall credit history. I'll tell you what credit score breakdown is allocated 35% of the credit score to your previous payment history. It will be looking at, do you actually pay your payments on time? How many late payments you've been paid? Did you have any bankruptcy, or perhaps you had a consumer proposal in the past? All of that will be showing in your previous payment history. It was the 35% of the credit score assigned to your previous payment history. In addition to that, it's a big chunk of the credit score allocated to measuring of current level of your debt. How many credit cards do you have? How much of the credit limit you use? And for example, if you have a credit cards which are limited to $2,000 and you overuse it, you use this amount and sometimes even more, it will literally sink your credit score down, because 30% of the credit score allocated to that particular component. So the next component of the credit score, it has 15%, which will represent the length of the credit history, how long you had this credit report. If you opened that recently, as most of newcomers, obviously it will have a bigger impact, and your credit score will be a little bit lower compared to someone who already had that credit report for amount of 10 years. The 15% of the credit score allocated to the length of the credit history. And then the smallest components are allocated 10% each of pursuit of the new credit. If you are constantly opening the new credit cards and you are looking at and you're looking to the different banks and searching for line of credit or something like that, it will show the lender you are actually living beyond your means. You always searching for the credit money to meet the ends, and it's a risk indicator for a lender. And the last component, and it's again 10%, it's just the credit mix. You need to have a healthy mix of credits, such as credit card, installment loans, and maybe mortgage payments. If you have a little bit of everything, then it will show the lender you're in good standing, it's in a good standing position, and it will be less risky to lend you money.
Thank you, Elena. Thank you, Elena, for all that explanations. It's very helpful. That's it for today. And next video, we are going to continue to talk about credit report essentials. We will talk about how to improve the credit score and what is the differences between credit score and credit report. If you have more questions related to real estate, you can always reach me out at 647-887-7358. If you have more questions related to the mortgage, you can always reach out, Elena. Elena, what is the best way to get in touch with you?
Sure, Slava. My phone number is 416-888-4716.
Thank you very much, and see you in the next part.